Good morning, Predicted Trades family. Hope everyone is doing well. Well, let's dig on into some prep. So, we've had a very interesting last couple of weeks. We came off a daily squeeze bottom and off of the daily 50, this purple line down here. And we made a nice pop back. And then for 2 weeks straight, we have been stuck in a range. And man, has it been grueling. We've had some great days in the room, definitely. But, we have to recognize when we start to settle into a range, start to settle into a wedge, and when to start to take action. As you can see, drew a little wedge that on Tuesday we were holding pretty well, and then there was an end of day rug pull, big sell down. But we had all of our stacked squeezes sitting waiting to provide support. 4 hour, 2 hour, 1 hour, even 30-minute, all stacked squeezes that we held on that drop and on the overnight, and we opened up right back at that 4136 key level. We had a quick dip yesterday, but held a higher low from the overnight session, creating a new trend line of support down there. And then we had an amazing response, finally got through our trend line from the week and took off. Once we were through 41.45, it was clear signs to us, since we've been tracking the trend line and the 30-minute 1 hour squeeze top. Once we got through that, it meant we were going to fire with momentum to the upside, and boy did we get up there. We got above this 41.56, 41.65 zone, and we held it on the pullback late yesterday and overnight. And now we're pushing up to new highs and arriving at our next zone, 41.83, 41.90. If we look to the upside, we've got some key levels at 41.83, 41.90. 4200, obvious big key level, 4205, 4208, which was a recent high on the last drive up. Excuse me one second. So, we know our key targets to the upside, past 4205, 4208, looking up to 4232, which is where we start to run into the top of a 2-day squeeze. The daily squeeze starts around that 4200, so we do have resistance sitting up here, just like we had support sitting down here. That's why we track our squeeze clouds. And if you're not familiar with squeeze clouds, I'm going to be putting out a video very soon, likely this week, to help explain the squeeze cloud and why we track it. But overall, we still have 2 days left in this week, 2 days left in OPEX. Overall, as long as we hold above our zone here, 41.56, 41.65 on any pullbacks, I am expecting us to try to get continuation up to 4200. The second that we start to lose this zone and the daily 8, then we are going right back down to 41.36 for another test. And if we drew a little trend line here from the overnight and the dip. Yep. If we roll over, start to lose 41.65, then it's down to 41.56, 53 where the daily 8 sits. Should we lose that? 41.45, 41.41 where the daily 21 sits, 41.36, 41.30 to hit that trend line. I'm only talking about the downside because it is an OPEX week. Otherwise, I kind of expect us to hold up here. But since it is options expiration and the next month's OPEX is a quad witch, we could see a little pullback and reset into this range. Just something we should always be cognizant of. But overall, looking to play this continuation. And as we go through tech names, you'll see there's a lot of risk on going on out here. So there might not be so much cause to, well, at least there's not, in my eyes, a ton of reason to think about a large pullback. Now, I say that with a little bit of a hesitation because as we start to break this flag up, our daily 50 is coming up to 4,100. We've held the daily 50 for a couple of tests, and we are trying to push. Should we start to have a little peak above and a failed back down, it wouldn't shock me. And I'm not talking about necessarily today or tomorrow, but maybe in between this OPEX and the next in June, which is a quad witch. If you go back and look historically, between this OPEX and the next, there is usually a little bit of a reset before that summer tech rally. And we are seeing, as you'll notice when we go through some names today, that there is some risk on coming into those tech names. And they are pushing up near second and third Keltners. So I could see a good bull run in the future, but also that we are getting a little exhausted. And there might be a pullback in tech, some rotation into some other names. Just a thesis I want to start talking about with everybody. Doesn't mean today, doesn't mean tomorrow. Just something to think about over the next month. Because if we do have some red candles that bring us down, and then we come back up and have a strong summer, we'll at least have started talking about it now. So, overall, today, and before I get too excited about today, let's take a quick look at our economic calendar. Come on. So today, I would say maybe just looking at the week so far, it's been pretty light as far as economic data. We had our retail data, wasn't too bad of a reaction to it. We've had a ton of Fed speakers, and today I'd say it's kind of our maybe biggest data drops of the jobless claims, couple of Fed speakers, and then home sales and some leading economic indicators. So we do have a 10 a.m. data drop. So on a little gap up, we want to be ready for them to do a little push in the first 30 minutes, give us a little gap and go, and then that 10 a.m. data drop is going to cause some candles to pull back, likely maybe even a slight reversal into a downtrend to get back to our zone that we talked about, 41.55, 41.65, yep. So be ready for that 10 a.m. data drop. Tomorrow, actually, it's just speakers, and we have Powell and Bernanke on a panel at 11 a.m. This could cause a bit of a boring Friday. It could be something like we get a good push into 11 a.m., then we go sideways till 2, So, looking at next week, we've got some PMI data. We've got the minutes from May's FOMC. This is not a new FOMC meeting, just the minutes. We're used to this. It can cause some little reactions because it is some extra data for the algos to digest. But next week, the big one, GDP, along with our jobless claims as always, and then some durable goods, some personal income, some PCE. GDP, PCE next week, right after OPEX, and kind of going into the end of the month, right? We do have a couple of days left in May. The week after next week, but we're pulling up to the end of May. So, let's get back to the market. And as you can see, the That's just why we track the key levels, key zones. Already tagged that 41.83, having a little pullback. Wouldn't be surprised if before open. We got to see if we can hold yesterday's high in the pre-market. If we start to lose it, then we're probably coming back to VWAP and this 41.70, 41.75. Let's see if we're going to have a quick pop up to interact with this zone. I love these levels, 41.83, 41.87, which is the first Keltner to the upside, and 41.90, they're going to be key. It could be a quick push up to these, then a little fade back, shake some people out, get rid of the people that bought the top, and then scoop up their contracts and keep going. It could be a quick pop up, come back to this zone, and sellers are too aggressive, buyers aren't stepping in, and we come back to our daily moving averages, and we're talking about more of that OPEX reset. Could also happen this way just to set up for a Friday ripper, as they like to do on tech. So just some scenarios to think about. Overall, overnight lows and the pullback from yesterday late in the day, that 41.65. Losing that, we want to look at this candle. We're on a 30-minute time frame. In 30 minutes yesterday, we spanned from 41.65 after getting through that 41.45. So if we cannot hold this 41.65 during the cash session today, it could be a quick drop to get right back down to this 41.56, the daily 8, maybe even engulf that candle. But if we're going to try to push and break out of the range that we have been in, right? We've been stuck in this range for 2 weeks, and we are finally above it. I'm going to kind of draw a line in the sand today to say if the buyers can't hold up the daily 8 here, then this is looking more like a trap to come back down and settle flat in the range for OPEX. That daily 8 around 41.53, which as we've seen all week has been strong resistance. So got to hold above 41.53 today if we have any strong pullbacks and if they're going to load into Friday. That's kind of my line in the sand. Under that, I think sellers are going to get more aggressive to completely get back to 41.36. But we could easily just hold that 41.65, push up through this zone, and get up to 4,200 and the daily squeeze top after firing the 1 hour, the 2 hour, and overnight, the 4 hour. You can see over here we've got a F saying that we have fired it up yesterday. The 1 hour and 2 hours had Fs. So we have momentum coming behind us. They've spent so much time loading long. Look, load long, take profit. Load long, take profit. Just repeatedly. And now we're breaking higher out of a flag and consolidation. Continuation should come in. Let's see what we get. Moving on to NQ. And, just real quick, one thing I'll say on the daily over here. We've got this zone of resistance, right? We have this zone of support, and we are trapped in between them. We're knocking on the door right now. We really need to get above and hold. That's 41.80 up to that 41.90. Really need to get above and hold, close above it, push off of it for a true breakout, right? So this is looking great, but we still are in an overall flag. Let's see, as we get to the top, can the buyers maintain control? NQ. Look at this. When people say the market's flat and it's not been going anywhere, we do need to look around. NQ's just been on a tear. 13,000 up to some key levels, 13,683. But look at the pattern. We got back above the daily 21. Big old push. Fade back to the daily 8. Big old push. Fade to the daily 8. repeatedly getting that push. So as we are up in the top of a 1 day and 2 day squeeze, and that 1 day is getting pretty thin, ooh, I think it might have fired. Yes, the NQ, the 1 day squeeze, is firing today. Yesterday was the last day. There's a tiny sliver here. It's a little hard to see. That sits about 13,620. So on any pullbacks today, we really want to see us hold 13,600, 13,620. I know it's a bit of a mess with all these levels, and I'm zoomed out. But where that squeeze used to exist, we have seen pullbacks to retest something like that, basically the breakout point. So 13,600, 13,620, want to see that hold on any significant pullbacks. As long as we can hold there, then it's a fight back up. 13,686 key level, we almost tagged it pre-market. Then 13,700 to 720. Next key is levels to get to. And I know this is riddled with levels. This NQ chart dates back a couple of years, and it dated, it lived through the drop last year. And as we hit key levels and settled for a few days and saw good bounces, I tried to mark where those levels were. But yeah, we'll leave them up just for now. If we start to lose that 13,600 again, just like this very strong candle up, I expect us to engulf to try to partially or completely fill it down to 13,570, 13,550. And the daily 8 sits down near 13,500. So as we try to knock on the door of 13,700, if we're going to get that reset for OPEX or whatever, those are the targets to the downside. But overall, let's just see if we can hold that 13,600 and keep on trucking. On to the ready. One that has, been a little bit of a lagger. At least yesterday was playing along, all indices pushing together, and ready has already pushed through the recent highs, while ES, still has some to contend with. Well, I guess those are from a little further back, since we are just looking at a couple of weeks. But either way, the ready. Overall, I would love to see it just hold the daily 50 on any strong pullback. We do have yesterday's pullback in the afternoon around 1775. We have the daily 50 around 1773. It didn't even need to get down to tap that. So on any pullbacks, basically that 1773, 1775, a zone that should get held. Buyers should step in to defend to get up to this 1800. We start to lose that, then it's back to the daily 21, 1765, daily 15, 1760, to engulf yesterday's drive. As long as we can hold up, looking to push through 1790 pre-market high to get up to 1800, and the top of the daily squeeze, 1810, 1820. YM. That's not YM. But good to see silver on the retreat. It's kind of confirming the upside. They're going into risk on. YM back up to the daily 21. And daily 21 providing some resistance around 33,550. The daily 15 at 560, also kind of the pre-market high. On any pullbacks, pre-market lows got a hair below the daily 8 around 33,400. At the bottom of where a 30-minute squeeze popped up overnight. So overall, I want to see us hold above 33,400. If we start to lose that, then we're going to drop back down to that daily 50 at 33,340 and potentially engulf that candle back to 33,300. But if we can hold up here, looking to get through that 33,560, the daily 15, and start to press back up to these recent highs. And the last flag around that 33,700 to 33,800, kind of a 100-point span. And the most recent high, 33,850. So YM still has some catching up to do to get back to those recent highs. Also a little bit of a lagger, but at least made it back to the daily moving averages. Let's see if we're going to get continuation to push off of them, or if we're going to get hung up in them and kind of chop around today and tomorrow. We've got POC, 33,650. Really? Yeah, POC for May up at 33,650. So we are arriving at POC and the daily 21. It was a magnet to get it up here. Let's see if we can get a little momentum to propel through and get back to these recent highs. And moving on to individual names. Apple, big reaction after earnings and straight sideways. But overall, holding our zone around 171 to 172. And yesterday, it slipped below it just a hair to get near 170. And then right back up. And looking strong this morning. Overall, let's see if we can hold above 172. If not, we're going to revisit 171 and the bottom of those squeezes. Maybe even yesterday's low. But if we can hold above 172, they're going to push through 73, 74, get up to 175. Recent highs 174.6. AMD. Oh, finally got above 100 and held it yesterday and just pushing. I know a number of folks in the room have been all over AMD this week, started going long on chips on Monday with NVIDIA and AMD, and everyone's been eating real well. We got down to that 4-hour squeeze on Monday and that daily 8. You know, it's just like, look at something like this. Daily 8 and a squeeze bottom should be support. So you don't have to take the risk right here if you don't want. Let it come back through and hold. You can take the break above, right? Otherwise, you try to get in at that squeeze bottom. But overall, just a strong week on chips. Now we want to take note if leaders start to give out. Got a very sharp, basically a 45-degree trend line that's been carrying us up. Let's see if it holds. Let's see if we hold 104. Basically more like 103 today. We could take a dip to there and test that trend line and still get a bounce up to that 106, 107, where the third Keltner sits to the upside. We do have, is it next week, I believe, NVIDIA reports? Yep, it'll be next Wednesday, I believe. So, chips having a run into NVIDIA earnings, getting near their third Keltner. Something to take note of. They could be, riding that pre-earnings run. They could be getting ready to take some profit into the earnings and be high enough to absorb a reaction that could just get us back to the daily 21 for a further push. You have to start thinking like big money, right? We have been loading since 80. We're up at 104. This is usually third Keltner where we start to get exhausted, and we're going into NVIDIA earnings. There's going to be profit taking up in this range. There's likely going to be, continued strength, right? Little dips and hold and keep going into earnings. And then you could get a sympathy play off AMD and NVIDIA. Yes, we've had very good earnings lately on everything, and the reactions have gone well. But sometimes they give a reaction just to reset for the next leg up, right? So, some things to keep in mind for AMD. Let's see if we can hold that 103 today and keep trucking up to 106, 107. Start to lose that 103, it could be a quick drop back to 102 and 100 where we held yesterday. Amazon, another strong name, right? Pushed away from moving averages last Wednesday, Broke that 105, pushed up to 112. The fade back to a daily Keltner and the daily 8 for a quick tap on Monday. That's when I know some of the folks in the room hit a little bit of Amazon and just kept on trucking from 109 up to 116 now, setting new highs pre-market. Very strong mover. Congrats to everybody that hit that Monday and Tuesday and still holding runners. That's what we do. Want to keep an eye out for that third Keltner around 117 today. Could be a spot that we hit some resistance, start to see a pullback. Overall, I'd like to see 115 hold. If we start to lose 115, then it'll be back to yesterday's lows around 114 and a daily Keltner near 113.8. Should that give out, then it'll be back to like 112, 111 where the daily 8 sits. But if we can keep trucking, 117, each dollar point basically up to 120. Google, another strong name. I do remember some folks calling out, going long from this 103, very key level that we have been tracking. I could go back, but we were stuck under 103 for a while, and then we got above, and we held. So from that 103 over the last couple of weeks, getting up to 120, 157. Our key level, yesterday's high at 121.67. I was 10 cents off. Overall, on a pullback, we'd want to stay above 120. That's where we ran into some resistance pre-market yesterday, and then once we got through it, we took off and arrived at my target. So overall, we need to hold above 120 to continue through this target to get up to something like 125 and up to 130. Those are the next big time frame Fibonacci numbers that I have. And we are getting past third Keltner. Can we keep trucking? Absolutely. They could definitely make a point here to be like a big push up to trap everybody and then tank it back and reset the board and do it again. But with 130 being so far away and just getting from 110 to 120 took, a couple of weeks. Let's see if we can get through that 121.5 today, and if they let it fly, or if we just keep resisting that 121.5 up to 122, start to roll back over and lose 120, and then we want to target back to that 117 daily Keltner. Yesterday's low around 119, then 117, 115.5 where the daily 8 sits. But I'm not expecting Amazon to give out like that necessarily after such a strong drive. I think she more goes sideways at this level. We see some consolidation before any kind of big rug pull. Moving on, Meta. Meta's got a little more room to play. Overall, I want to see it hold above 242, overnight low, and the pullback from yesterday where we tagged VWAP. So basically looking for that 242 to hold. If that starts to give out, then it's back to 240, and the recent high from Monday that was resistance. But if we can hold 242, looking to get through a 244. We stopped just shy of it yesterday and pre-market. If we can get through 244, then could be a nice push up to 246, 248, and the third Keltner to the upside at 249, that big psych level 250. Microsoft. Definitely had some more dramatic movements, but you can see good push away from moving averages, up to some squeeze tops, fade back to the daily 8, big response up, back to the daily 8. Just been trying to fire this 4-hour squeeze for weeks, and now it's finally firing. So overall, on Microsoft. Want to see us hold above 313 today on any pullbacks. 313.5 pre-market low, overnight low. And as long as we can hold there, looking to get through 315 and head on up. That third Keltner sitting up near 319, psych level 320. That's the next big target if we can get this push through 315, 316. But if we resist and start to lose 313, then it's probably back to yesterday's lows near 311 and the daily 8 at 310. Netflix, my baby. So Netflix had a slightly different week, as it's been a little bit weaker and fading back to daily moving averages. But on Tuesday, we were noting that it was holding the open range buy zone in our beast system. So that's when I called out, hey, it's looking different today. It looks like they're buying and defending at our open range buy zone. And I called out the 345 call, which was sitting at beast for, I think that spanned about 40 to 60 cents. So we loaded into some of those on Tuesday midday. And it really never went below 40 or 60 cents. I think we loaded on this bounce and there was another pullback. And it held above our entries during the pullback. So we swung some of that, maybe locked some profit in the day, depending on who you were. Yesterday we had that quick dip back and a just as quick response right back up. And when we got this little dip in the morning, our contracts dipped right back into our buy zone, giving us another chance to load up between that 40 and 60 cents. And then they ran up to about $1.70, $1.80 yesterday. And Netflix made it back up to 340. And now we're going to be opening at 345. Our 345 call that we started swinging from 40 and 60 cents, likely going to be in the money, likely going to be over $2. So congrats to everybody that's still holding. Another great trade. I mean, we've hit in the room today, or this week, we've seen folks calling out the moves on NVIDIA, AMD, on Google, on Amazon, Microsoft. I mean, folks are nailing the trades in the room, and Netflix was a great group trade that, we could get a very good push here. We've got this recent high at 248. We're going to be opening near 345, sorry. So we could get a quick push up to that pre-market high, 347, that recent high at 348, and the top of this squeeze, daily squeeze, which spans from that 348, up past 352. That big psych level 350 is right near our second Keltner to the upside. I love this pre-market. Let's see if we can get a quick push up, lock a bunch of profit, maybe leave some runners for tomorrow. Overall, I want to see us hold above 340. We arrived there yesterday, chopped around, overnight low, 339.5, so 339.5, 340. Want to see that hold. Start to break that, likely going to cut any runners that I have. And at open, likely going to lock a little bit of profit just in case we do get that pullback. But overall, great move, recognizing a great fade back to moving averages and getting through. I think we saw that we started to get through this on Thursday, and we didn't retest it. So it wasn't so shocking to see the dip to retest, hold the daily 21, daily 15, and then a quick move to the 8. It just gave us all the confidence. Let it run, keep it swinging. So let's see if we can get our targets and lock some great profit on Netflix today. NVIDIA. Oh boy, NVIDIA. I think, Watch started calling out on Monday the 305 call, which I think went 26 cents up to $1.30 the first day. Or no, it's 26 up to 75, and then it went up to $1.30 the next day, and yesterday just kept going, and I think they're going to be opening in the money, those 305s now. That we caught right off that Monday low, right off that squeeze bottom daily 15. And folks have been swinging them all week. So overall, great trade. lock a little profit now that we're in the money. Well, let's see if we can continue up to 308, 310, and 312.5 are the next big key levels. 308 is that third Keltner to the upside. I mean, we closed at 301 and we're about to be opening at 306. I mean, great move, great gap up. So definitely like a little profit. If we start to lose 305, then we could see a little bit more of a gap fill back to this 302-ish that we closed at. Should 302 start to give out, then it's back to 300. But the daily squeeze has fired, yes. And the 2-day squeeze is getting very thin. It could fire today to get us up to that 312 and past that third Keltner. And the video reports next Wednesday after the bell. QQQ. Yesterday finally got above this 330 big key level. So overall on any pullbacks today, 331 kind of the overnight pre-market low and 330 the big key level to hold. So if we start to look weak early, it could be a dip to test those two. Want to see them hold, and then they bounce back up through 332, 333 to get up to 334.5 where the third Keltner sits to the upside. If we start to lose 330, then we could engulf quickly back down to 328 and 327 where we pulled back to, held overnight into yesterday, held it during the cash session, and then took off. Let's look at SPY. Finally got above 414 yesterday. Big key level. Held overnight. It'll be opening near 316. So on any pullbacks, 315 would be nice if it's a quick early pullback and a quick, just as quick response back up. Start to lose 315, then it's down to 314 to retest what has been resistance. Should we lose 414, then we're going to just fall right back into range and right back to daily moving averages. So overall today, we probably want to watch that 414 put just in case, right? But if we can get that little dip to 415 and hold, keep an eye on that 416 call, 417, 418 for today, tomorrow's expirations. If we can hold that 415, get through pre-market high, 416.5. Next key level is 417.3, 418.15, up at the top of the daily squeeze. Past that, it's 419, 420. Tesla. I talked about this week and even last week. Yeah, last week, if you go back and look at preps, I said keep an eye on this 167.5, 166. That could be the zone that they're going to try to load long on. And we saw last week. Gap ups off of it. Fade back. Hold it. Big push up. Fall back. Slip below it just a little bit to tag this daily 15. And squeeze bottoms. And then right back above that zone. And even yesterday, little dip to it right near open, 167.5, and then boom, right through 170, right on up to 175 and above. Got up near 175 yesterday, gapping over it now. Overall, would like to see yesterday's high hold around 174.5 or the pre-market low around 173.72, little zone of support. If we can hold that, we could see continuation to get through pre-market highs at 176, get back up to recent highs 177.5-ish, and hit 178 where the daily 50 sits at the top of a daily squeeze. That's just starting to form. Past 178, it's 180, big key level. If we start to lose that 173.72, the pre-market low, we'd want to see 172.5 hold. If that can't hold, then we're likely going to slip back down to test 170 and the daily 21. And finally, VIX. VIX has just constantly held this 16.5. And yesterday, we got a quick pop up to near 18, got a rejection back down through, and a slow grind down into these squeeze bottoms. Those squeeze bottoms still sitting there means it could be some resistance and be hard for VIX to get through them, meaning it might have to push against them for a day or two to get them to open up and actually fire to the downside. So we're not out of the woods yet. That's why even though we've had a good push and whatnot, I'm still, talking about downside potential on a lot of things. Because VIX could continue to hold this 16.5, shoot right back up, and we're going to get a pullback, right? So overall, today, for continuation to the upside, want to see VIX stay below and reject 17, roll over and lose yesterday's lows near 16.7, get down to 16.5 and below it, maybe even down to 16, where the first Keltner to the downside sits at the bottom of the 4-hour squeeze. That would be continuation. You can see the channel off of these squeeze tops, basically staying in that channel and heading further down will give us continuation of the upside on the market. But if we get up to that 17 and start to break through to 17.2 and hold above 17 on any pullbacks, then we're likely going to see a larger pullback on the market and see VIX get above the daily 8 at 17.2, back to the daily 1 at 17.5, and back to the squeeze top at 18. Just like anything else, when we're nearing and hitting squeeze bottom, we want to be cognizant and ready for the reversal. But if we can get continuation on all of the buying that happened yesterday, then we can see VIX slowly drift down to that 16.5 and 16. So that's it for prep today. Hopefully everybody found this helpful. It is a Thursday, so it's a free day in our Discord server. There's a link in the description of this video so you can join our server for free. And every Thursday we like to kind of mob into our main chat with all of our paid members so that you can get a feel for what it's like to join predicted trades before you join. So if you're interested, definitely join our Discord server, link in the description, and say hi in the main chat and that you'd like to try out the Beast system for today. I think it's worth looking at that Netflix call. Let's see if I have it handy nearby. We'll just pull it up. Oh, I've got this. Oh no, we've got a 3-day. Good. So here's that 3:05 call on the video where it got down into our buy zone on Monday. Around that, I think it was around a quarter where most of us got in. And then took off up to, and yeah, it even dipped to it again on Tuesday, near a quarter. Took off to $1.30, $1.60. Yesterday held our buy zones, open range buy zones around 50-60 cents. Took off back up to $1.80. If you've never seen anything like this, our system that we provide at Predicted Trades plots key levels on your options charts. Some of those levels are buy levels, and the others are sells. And we play off of these levels every day. Our proprietary system, our algorithms calculate these levels for every single strike out there. So if we load up our Netflix, 3:05, 19 call, 3:45. We can take a little look at that trade. So I called it out on Tuesday. And we picked it up near that 50-60 cents. It held and pushed a little bit into close near 70 cents. We had that little gap down, but it held our buy zone around that 40 to 50, 40, 60 cents, where we were able to add some more and shot up to that 160 yesterday. Now likely going to be gapping up and likely going to be above $2, maybe even up near 250, 270, since it'll be in the money. So this is just an example of our system, what it looks like on your options charts when you get it loaded. It even works on equity. Providing those buy levels. On Netflix, I said how on Tuesday they were holding the open range buy zone, only dipping below it a little bit. This is usually indicative that they're trying to load for a move to the upside. Just like if we go back, there are other days where they hit that sell zone, can't get through, and it starts kind of like a 2-day down. And yesterday, even when we had that dip on Netflix, it just went down and tagged our open range buy zone and then right back up. So, overall, this is just giving you an example of what our B system looks like when you load it on your charts. It works on options, futures, equity, everything. It even works on some internals. This is the overnight on ES. You can see it dip down near our open range buy zone. This is where we would load long, and from there, near that 41.66, you get this move up to 41.80. There's plenty of times where we will hit some of these trades in the evening. There are times when I wake up at like 2 a.m. and check where we're at and be like, oh, we're near buy zone. I'll throw a little trade on with some stops, just in case. And then I wake up a few hours later to a nice little trade. So overall, that's it for prep. Thanks everybody for tuning in. And we'll see everybody in the chat today.